And on this video, Robert Kiyosaki, the one who wrote the book, The Cashflow Quadrant, is saying to us that you cannot see money with your eyes. This is video number 55. Please join me. Hello, welcome to Take a Step to a Better You. Here I share what I know and continue to learn. And this one, I've been reading the book, The Cashflow Quadrant, and today we are starting a new chapter. Chapter number 6. So if you are new, my name is Sherifa, Nakalema. I'm a business owner here in Virginia, USA. And here I like to talk about money, managing it, making it, spending it well. I also talk about personal development, motivation, affiliate marketing, a mix, but all with the intention of asking you to take a step to make your life better. Please, if any of that sounds interesting, consider subscribing to this channel and clicking on the bell so you know when I have new videos. And for new content, because sometimes I drive around, I do many things, I'll show you on the schedule. For those of you who already said yes to this message, I appreciate you very, very much. Because this message, right now, it's not watched by so many people, but my hope that soon this channel will be watched by many people, especially younger people, because I have very important content on here, especially these books that I'm reading. So please support the message, share, like, and everything. My schedule is here daily. I'm here daily, but I don't want to talk about the schedule now. I just display it. So we take a moment to observe it. The only thing I have to explain is that on Sunday, the time is changing. That's the only time is changing, that I come a little bit later, thinking of some viewers in some countries that are missing out, because YouTube recommended that I lower the hours like I come. So we just recently changed it. So it's not good. Some of you will not like it. So that's why I left Sunday, the motivational day, to move it up so that you can also view us. I mean, you can be on the premieres and all that stuff. So that's the schedule. Now, this book, in fact, today, because it's a new chapter, I feel like I want to reintroduce Robert, the one who wrote this book. Because normally we just continue and read, but who wrote this book? Who is he? So Robert Kiyosaki is the one who wrote this famous book. The Rich Dad, Poor Dad is more famous than this second one, because that's the second book. Although he has done newer versions, he revises them. And remember, in this chapter today, he's saying you cannot see money with your eyes. But let me first remind you who Robert Kiyosaki is, especially if you are new. He wrote that book, and he is an entrepreneur. He's an educator. He's an investor. And he believes that I got notes from the book. He believes that the world needs more entrepreneurs who will create more jobs. So he's teaching us how to become entrepreneurs. And this book is about the Cashflow Quadrant. He calls it the Cashflow Quadrant because, according to him, we earn money, including you, from 8 of these quadrants. He says on the left, you are an employee, or you're a self-employed person, or a small business owner. On the right, you are a large business owner, or you are an investor. So that's what he's explaining it. What's going on in that quadrant and where we need to be. He wants us to move ourselves from being self-employed people or employees to, you don't have to leave your job or anything, but you have to have those skills on the right. And I agree with him. So here, I like people, you can stay close if you want to start a business, okay? Because I talk about that a lot. Now, because this is video number 55, so if you want to see what we've been doing, to watch all those other videos that I've recorded since I started the book, please see a link. I think I'm linking a comment. In the comment, find the link that takes you to all the videos, starting from number 1. You can skip. When you look at the way I named the videos, you can see what I'm covering. If you're interested, if you're not interested, you skip and go to the next one, like that. And then, yeah, if you want it the audio book is free. A link in the description takes you to Amazon Audible, and the physical book, the link takes you to Amazon.com. But that one you have to buy. The other one is free for 1 month. I think 1 month you can finish reading listen to a book. Okay. Now let's read let's start chapter 6. Some of you have been waiting for this because I've been mentioning that the title will be, you cannot see money with your eyes. Okay, let's see what he's talking about. He has a subtitle when he's starting this. He says, you cannot see money with your eyes. Money is an idea that's more clearly seen with your mind. It's like a subtitle. Money is an idea that's more clearly seen with your mind. Is that interesting? Okay. He says, in late 1974, I purchased a small condominium on the fringe of Waikiki as one of my first investment properties. He's telling a story, but there is a huge lesson. The price was $56,000 for a cute 2-bedroom, 1-bath unit in an average building. It was a perfect rental unit, and I knew it would rent quickly. I drove to my rich daddy's office, all excited about showing him the deal. He glanced at the documents, and in less than a minute, he looked up and asked, how much money are you losing a month? I responded with about $100 a month. My rich dad said, oh, don't be foolish. I haven't gone over the numbers, but I can already tell from the written documents that you are losing much more than that. And besides, why in the world would you knowingly invest in something that loses money? Well, Robert was responding, the unit looked nice, and I thought it was a good deal. A little paint, and the place would be as good as new. That doesn't justify knowingly losing money. Rich dad was smart, rich dad. Well, my real estate agent said not to worry about losing money every month. He said that in a few years, the price of this unit will double. In addition, the government gives me a tax break on the money I lose. Besides, it was such a good deal that I was afraid someone else would buy it if I didn't. Rich dad stood and closed his office door. When he did that, I knew I was about to be chewed out as well as he taught me an important, I'm sorry, let me read this again. Rich dad stood and closed his door. When he did that, I knew I was about to be chewed out as well as be taught an important lesson. I'd been through these types of educational sessions before. So how much are you losing a month? Rich dad asked again. About $100, I repeated nervously. Rich dad shook his head as he scanned the documents. The lesson was about to begin. On that day, I learned more about money and investing than I had in all my previous 27 years of life. Rich dad was happy that I took the initiative and invested in a property, but I'd made some grave mistakes that could have been a financial disaster. However, the lessons I learned from that one investment, the lessons I've learned from that one investment have made me millions over the years. And, I decided to continue because we want to know where this ended. So he has another subtitle. It says, money is seen with your mind. Remember, that's sort of the title. So he continues to write, it's not what you see, it's not what your eyes see, said Rich Dad. A piece of real estate is a piece of real estate. A company stock certificate is a company stock certificate. You can see those things, but it's what you can't see that's important. It's the deal, the financial agreement, the market, the management, the risk factors, the cash flow, the corporate structuring, the tax laws, and 1,000 other things that make something a good investment or not. He then proceeded to tear the deal apart with questions. Why would you pay such a high interest rate? What do you figure your return on investment to be? How does this investment fit into your long-term financial strategy? What bankruptcy factor are you using? What is your cap rate? Have you checked the association's history of assessments? Have you figured in management costs? What percentage rate did you use to compute repair? Did you know that the city has just announced it will be tearing up the roads in that area and changing the traffic pattern? A major thoroughfare will run right in front of your building. Residents are moving to avoid the year-long project. Did you know that? I know the market trend is up today, but do you know what is driving that trend? Business economics or greed? How long do you think the trend will continue up? What happens if the place doesn't rent? And if it doesn't, how long can you keep this place and yourself afloat? And again, what goes on in your head to make you think that losing money is a good deal? This really has me worried. Wow, that's a lot of, that's a lot. That's a lot of what he said there. There's a lot we have to learn. So he said, it looked like a good deal, Robert said, deflated. Rich Dad smiled, stood up and shook my hand. I'm glad you took action, he said. Most people think but never do. If you do something, you make mistakes, and it's from our mistakes that we learn the most. Remember that anything important can't really be learned in the classroom. It must be learned by taking action, making mistakes, and then correcting them. That's when wisdom sets in. I felt a little better and was ready to learn. Now Robert is writing, but I'm about to finish the reading. Rich Dad went on to explain that people look at a piece of real estate or the name of a stock and often make their decision based on what their eyes see. That broker, what a broker tells them, or on a hot tip from a fellow worker. They often buy emotionally instead of rationally. Emotionally instead of rationally. That's why 9 out of 10 investments don't make money, said Rich Dad. While they might not lose money, they don't make any either. They just sort of break even, making some and losing some. That's because they invest with their eyes and emotions rather than with their minds. Many people invest because they want to get rich quickly. So instead of becoming investors, they wind up being dreamers, hustlers, gamblers, and crooks. The world is filled with them. So let's sit down, go back over this losing deal you just bought, and I'll teach you how to turn it into a winning deal. I'll begin to teach your mind to see what your eyes can see. So I have to stop here for number 55. Then they're going to go over this deal in the next video, which will be number 56. Okay, so what did you follow what I just read there? When Robert went and bought a house, a little house, thinking it's cute, and just put himself a little pain, but he was losing $100 every month. That was what he's estimating. And Rich Dad was not happy with that he did that. I think some of you, please leave a comment for me, because have you heard of the phrase where I said that money is made when you buy, not when you sell? Like, for example, when Robert was buying that house, you are supposed to calculate the numbers and see that you're winning right now, because the agent was telling him that the price will increase later. For example, if you are buying a property, maybe it costs like, okay, $50,000 today, and you're losing money, you cannot be thinking, oh, 5 years from now it will be costing 55. They don't want you to think like that, because you don't know what could happen. You cannot buy something just because you think it's going to have value later. They say it needs to make a profit now. It has to make sense now. I've heard it a lot, by the way. Sometimes it doesn't make a lot of sense. Please leave a comment for me if you understand it. They say money is made when you buy. You cannot say, let me buy this thing, I'll make money later when it increases value. Okay, increases value, fine. But it has to make sense today as you're buying it. That's a lesson. But it's not done. He's going to continue with this in the next video. Like I always end them, I said, take good care of yourself. Take very good care of your families. Take very good care of your health. Please like the video and add a comment, especially if you understood what I was reading there. It was a lot. The rich dad was saying a lot. Hopefully you followed. Okay. Take a step to a better you. Bye-bye.